Hey, welcome to the Mortgage Minute for Thursday, August 30th. I want to give you a quick update here. You know, a couple things that, again, here's a typical headline we're seeing. Vancouver housing prices least affordable. Wow, no surprise there. Again, we're seeing more and more talk about the affordability. Attached to this Mortgage Minute, you're going to get the weekly bulletin that I send out as well. And in it, there's two articles there I want to draw your attention to, well worth reading and looking at. Benjamin Tall is in an interview on CIBC, the Lang O'Leary Exchange. Please click on this video from Benjamin Tall and watch it. Well worth it, getting his insights. Benjamin's usually often optimistic and been a great friend of the mortgage brokering market, but he has even said that the fact that we're going to have a 10 to 15% correction in the Canadian market is inevitable. He's saying that's like granted. That's you can take that for granted, but more importantly, it's what follows the correction that's important. And he's referencing the new wave of immigrant buyers that are coming. It was interesting. I was at a RAIN meeting last night. Expert on China was talking about how we've had a wave, especially here in Vancouver. We saw the impact of the first wave of Chinese immigrants. There are literally triple the number of millionaire immigrants looking to leave China and go to the United States, Canada, England, Australia. So if we thought we had an impact in Vancouver on the first wave, there's more to come. That will soften the blow of what we call a soft landing. So we are going to be looking at about 10 to 15% correction, but not a 30 to 40% bursting of the bubble, according to Benjamin Tall. That and the new wave of kids from 25 to 44 are expected to be home buyers, combined immigrants and the people from 25 to 45, another wave of home buyers coming into the marketplace, and we should see some resiliency. It'll bend but won't break. That's the expectation on the Canadian housing market. And if you're looking at interest rates and you're following what I've been saying on Twitter, we're seeing the bond yields going up a bit, down a bit, up a bit, down a bit. Look for that trend to continue over the next upcoming months. I think right through the winter we're going to see that. So a little change, a little upward pressure on interest rates, and then a downward pressure. Speaking about interest rates, here's another article attached in the bulletin. You can read it. Click on this and read it. 3 reasons why the Bank of Canada is becoming dovish, not hawkish. In other words, why they're toning down their talk about rate hikes and looking to more maybe easing and maybe even a break in the prime interest rate, which is what the Bank of Canada controls. And there are a couple of reasons. Again, the same usual suspects that I've spoken about in the past. Global outlook darkens, and the global economic issues are putting downward pressure on the Bank of Canada. Therefore, less reason for them to look to raise rates. That, folks, is the update for this week. I hope you're enjoying the end of summer. Looks like some good weather coming this weekend, at least out here on the West Coast. Hope you're enjoying it wherever you are. That's the Mortgage Minute. We'll see you again soon. Thanks. Bye for now.